let's review the perfect breakout trades that you should have taken Friday. Today, November 7th. Let's go. I have ES chart on here. I don't have any indicators right now because I want to show you the two different ways you can trade the perfect breakouts. First system I'm going to show you with supply and demand, and then next one I'm going to show you the same chart with the liquidity, because two different strategies but both can help you to find the perfect breakout trades with the entries. Let's take a look here. Right now I have ES on the chart. I don't have any indicators. The way I started learning trading is drawing my own levels, drawing my own supply and demand zones and supply zones. That's how I learned. That's how I did it for so many years. Still I do that every single day. Now I use indicators and automated tools, but still I have the core knowledge on how to find the perfect demand zones and supply zones. That's way, even something the indicator is showing something different, I'll be able to make my own decision. Oh, I can ignore this. That does not look right. Oh, this looks good. I could have missed it. Both ways I can see. So let me show you how I draw manually first before I show you to the perfect indicator that you can use. The way I find my supply and demand is, anytime you can see the prices came back this level, second touch, third touch, fourth touch, I can clearly see that is a level I'm going to rely on. Same way supply is right here. Once the price came back down, you can see you could have taken the trade here also, breakout trade, that's still fine, but the only difference is you should have kept your stop right here. Okay, if you just because you're taking the trade here, if you keep your stop right here, I won't recommend. The reason is, using supply and demand system, you need to use those levels as to hide your stop. So this one, even if you're taken, it requires a lot of risk. I would not take it. But look at the next one, came back to the same level where the prices was bounced, broke out, retested. This is the trade you should have taken. So this trade, you can see, is perfectly worked very well. And then next level. So now this price level was bouncing multiple front. Price was bouncing here. This is where the whole level retained for the whole day. Prices was bouncing back. If you're taking the trade here, it's here, first up trade, and the prices were going down. Second trade, you can see it broken out and retested, came back down. So this is the second opportunity you can take. Anytime you're able to form the supply or demand, price came back out of that range, retested, and then pull back. That's a great way to enter. This is how I learned. This is how I trade all the time. I draw my own levels. Since then, you can see prices went all the way back. In here, it's a little bit difficult for you to trade using supply and demand system, but still you can. Right here, this is the last supply demand we have. One touch point, second touch point, third touch point, breakout here. You could have taken this trade here, right? So you could have taken this trade. I'm talking about price broke out, retested, came back down, but unfortunately this trade failed. So, but still, as per supply and demand rules, this is a valid trade. Price broke out, retested, and came back down. Still valid trade. Third trade, it failed. That's okay. But the beauty is that look at the price went back to the previous level and then bounced. So this is your fourth trade, and then look at this one, bounced this level to go back up. This is your fifth. This is how I used to trade in terms of finding those levels, breakouts, breakout, re-entry, bounce, those things. Now the next trade is, even if you're taken this trade, because it's bounced, come back down, it's still a valid trade as per the rules, but this one could have failed, taking a short trade. But either doesn't matter, the breakout here, you taken this trade or this trade, 7, 8, both trade should have been a excellent trade, because you can see how the market ended up. This is how I draw my own supply and demand levels without any indicator. This is how I draw. I find the levels, I find the entries manually. This is how I have been trading so many years. Now let me show you the tool that we have for the traders who don't know how to draw the supply and demand levels, how to find those kind of things. So here this time I'm going to go back to the indicators. So this is our supply and demand trading signal system, where it's going to draw the supply and demand on its automated, and also its best thing is it's going to give you the signals. Anytime that breakout happens or bounce happens, is going to give you the audible signal that you can make the decision: should I ignore, should I trade? You can make the decision on it based on the rules I just told you. It has 5 different algorithms. The one we're talking about, remember that breakout and retest, that's the first algorithm. Second one is just a higher highs, higher lows. In this context, I'm going to uncheck it because that only when the market is moving very, very fast, we wanted to find every pullback. In this case, I recommend breakout and retest, and breakout and swap, or even sometimes I would like to do the breakout and bounce also. So let's see. Okay, look at that. It's beautifully. Remember that I drew the levels levels here and levels here. It is able to give you the yellow circular arrows are like signals. You can see supply, demand, another short red zone down here. It gave you the long trade from here all the way out. That's why this system is going to find everything on its own. But one problem is that it's going to give you the every demand, but you don't have to take every demand, every supply. You can take only the signals. Red means the supply zone, green means the demand zone, yellow arrow, yellow zones are the one tradable signals. Reason is, here you can see the prices was like broken out, retested, and pulling back down. It gave the first signal. Again, price went back to the same place, going down, it gave second signal. Same level, it went back again third time, it gave you the next signal. Price went back to the same level. This time it didn't give the bounce. Remember that it didn't give you the bounce as a short trade. Instead it expected prices going up. It gave you the long signal, arrow up. That's why this system have a lot of algorithms. Still, you need to make you should know the basics of supply and demand, so you can still make the decisions. But it's easy. It's going to give you the sound alerts, and then the marker on the charts, everything. For every time there's a breakout, every time there's a bounce, every time there's a new strong demand, new supply, is going to help you. Okay, but next let's look at the same day different strategy completely by itself. So far we saw supply and demand. Now let me show you my favorite strategy that I use every single day is liquidity zones. Okay, this is based on level 2 market depth and liquidity. Here it's much easier to trade here, is because it's real time and also it's easy to follow. But still, if you know and understand the market structure, it's going to help so much better. What do I mean by that? Let me start with the same thing we talked about. Bounce market was started here in the morning. Why? You can see all the red lines are printed here, green lines printed here. There are no red lines here, there are no green lines here. That means sellers are adamantly staying here, buyers adamantly staying here. Either price need to go break out and retest and go up, or price need to come down, retest and go down. That's what we are waiting for. Anytime there's a consolidation, there will be a breakout. This is my saying always. Anytime there is a consolidation, prices is moving like stuck in a range between the seller's control and buyer's control, wait for the breakout. In this case, we can clearly see the consolidation. In this case, the prices was stuck in this range in the morning. Eventually it was able to break out, retest and come down. So by itself, this is a very good trade. First trade based on, you don't have to, the beauty is that you don't have to know how to draw the supply level or a demand level, because you are going to use the real time order flow itself. You can see the levels here drawn for you. Okay, but one particular thing I always look for is that breakout and swap. In this case, where prices was coming down, you can see the prices first time I saw the green became red was here, but unfortunately that did not last long. This should have failed. But I want you to watch from here, this level and this level and this level and then this level, this level. Okay, the reason is that even if you miss this entry here, you could have caught up here, you could have caught up here, you could have caught up here. Why? You are looking for the price levels where red becomes red becomes green, red becomes green, and then the red becomes green. See the green, red becomes green. We are looking for all the places. Then you can still enter the trend any perfect location. You're not going to enter in random places. Only the system with liquidity-based trading system is going to give you perfect entries, even if you miss the initial one. Because most of the time when we are in the trend, the biggest fear is, oh my god, trend is already, price is already moved this far. Is it too late for me to enter? Or if I enter, the move will be over. That fear is always be there, no matter what. Even I showed you the supply and demand system. I had that fear because it didn't give me clearly, because there's no clear supply and demand when the market is moving. What in liquidity trading, it's going to give you the clear place where the every single breakout, red to green, red to green, red to green, red to green, pullback, retest, it's going to give you the much better consolidation. But I wanted the reason I picked up this day to show you something extraordinary, how the market manipulations, how the prices are engineered so that they can get you a stop. Okay, so I want to start from here, this particular location. The prices was like creating a range right here, right? It's creating a range right here, and then prices was like moving down. Okay, prices from here, prices moved way back up. When you saw the very good decline, the prices pull back this much up. Obviously, in the trader's mind, in the beginner's trader's mind, oh my god, it is a reversal. I'm going to take a long trade here. What are they gonna do? Moment they saw first pullback, they're going to enter the trade and then put the stop here. Okay. What happens to the price? They came back to that level, took everybody's stop. Stop hunting is real. It took the stop and then move one more level. Okay, now I'm going to re-enter again. Definitely it looks like going for a long. People put a lot of stops here. You can see the green accumulated. What happened to the price? Came back down and then the start. So that means whoever enters here, enters long here, they all get stopped out, right? Because they engineered this price action by giving you the big move and a small pullback, so that pulling you into the trade. This happens every single time. But if you have the liquidity zone, this indicator, you have an amazing way to find something. What is this? When there is a move, breakout happen, look at this. This level, we already saw the strongest level. Why? 1, 2, 3, 4, 5, 3 bounces on the demand zone, 3 bounces on the supply. We know this level is very good level to trade on. But from here, if the prices went back up and bounce from here, you could have taken the trade right here perfectly. This is by textbook, but that didn't happen. What happened instead? From here, prices went all the way back up. Okay, now we know that we want to retest in this spot. That means in this level, instead of coming back to the straight up and then going down, they engineered slowly. Moment now we know the level, it came back to the perfect level, and then you can trade. That's why the liquidity zone is going to help you much better. Not only that, since again, let me draw that level again. One other thing we talk about is new order block, right? New order block means buyer stepping in. Buyers, it is in order for the price to move up trend or a little bit higher, buyers need to step in. Without buyers, price is not going to move up. That's a what do you say, common sense. Here, when the prices came back down, you don't see any green lens, new order block. Here, new order block. Look at here. Look at this part. Moment the price came back to this level, new order block is coming in. That means now the buyers are stepping in. The confirmation. That's when you can see the prices are moving up. Okay, this is one place that is, I'm pretty sure a lot of traders would have stopped out. Again, not only that, look at this. Okay, now people are like in panic mode already. Oh my god, price is going long, I'm missing the entry. What will they do? They will create a pullback here, because same range pullback. What happens next? They came back hard to take. Why? This level, again, go back to your basics of trading. Why this level? This level is, from the morning, was the strongest level. Look at this. 1, 2, 3, okay, 4, 5. So if at all price need to go up, it need to come back here. It need to take, look at this liquidity sweep. It need to take this liquidity before going a full run. These are the things you need to know. Trading is not simple. If you don't have the knowledge of how the market structure works, that's why I always say market structure knowledge, how to read your chart, how to read the possible manipulations, you are not going to have a good time in trading. You're going to have your stops is going to get hunted. You're going to lose your trades continuously. Know the levels you can trade. Know the levels. In this case, the supply and demand fundamentals, the levels fundamentals always helps. That's why even though I'm using liquidity zones, I'm going back to fundamentals, foundation of the levels, supply and demand levels. So this level was very, very crucial. You can see anytime you take the trade on this level, it always worked out. Don't you think? That's why the levels are very, very important. Okay, let me show you one more level. Okay, look at this level. Okay, perfect level. The morning level that opened, the levels, same level, it was struggling to go. Once it pierced through that level, retested it, it's going really well. That's why the levels, the supply and demand levels, look at the big picture for the full day, and then know the levels, and then look at the liquidity zones, where exactly it's a liquidity. Why? Prices always come back to the liquidity level. Take the liquidity before the big move. Always. Even the look at this ones. Every time market is creating this liquidity and the hunter liquidity. Every single day, the way the market makers was able to price action, they engineer the price action so that manipulate you to get into the wrong direction or the wrong level. That's when they can create the liquidity based on your trades, and then they can take those orders to reach the next level. Hope it helps. Know your levels, know the supply and demand levels, know the liquidity, how the liquidity is formed, how the liquidity is getting engineered, how the liquidity is swept and rejected. Have a great day. This is Rob from Basic Level.